Hey there, this is Richard from No Pants Profits, still sitting here with no pants. Oh, didn't zoom in, and hopefully plenty of profits. And we did a video a few days ago on a new company that was in the sweater investment field called Nada, and did a very baseline, about 15-minute video. And I'll be honest with you, we actually got the attention of Nada on this channel, and Nada wrote to me and said, hey, do you want to have a longer discussion to kind of understand where this is headed? I think we kind of hit the nail on the head with where it was headed, but I'm doing this for both Nada as a potential future Nada investor. I already, in full disclosure, I already went ahead and put $5,000 down for the Miami market as a request. I know that doesn't lock me into anything, and we'll talk about that. And as a sweater ventures investor who has about $15,000 in sweater right now. But we do have Monty here, who is the VP of revenue from Nada. And we are doing this in full disclosure on Nada's side, is providing the technology for Restream to do this because I don't have a Restream account. But let's go ahead, let's bring in Monty and just kind of talk about Nada.
Hey, Richard, thank you so much for having me. I appreciate you talking about Nada, bringing us on, and just the overall interest and enthusiasm that you're giving the company, and the attention it gives is I don't know, it's infectious, it seems like.
Yeah. I mean, I guess high level, we'll talk about what we talked about. High level is essentially much like Sweater is doing for venture capital. I believe Nada is trying to do kind of for real estate investing, because I'll tell you personally, I worked on cruise ships for 7 years. I got off about 3-4 years ago, and I never bought real estate because I wasn't sure where I wanted to live. And then COVID happened, and then the real estate market went crazy. And I am literally, I'm one of the strange people in the world that's invested in everything but real estate. Yeah, I have some REITs here and there, but I'll be honest with you. I mean, I got Robinhood, I've got Coinbase, I've got all of those things like that as investments. I've even got, from a qualified investor side, venture capital and all those things, especially with Sweater and privately as well. But a lot of young people are not into real estate because it's out of reach. I mean, to buy a house in Miami, my mom, I send her things from Zillow all the time, and she's like, this is a dump. You can't buy you can't buy a manufactured home. So
it's $500,000 or something crazy, right?
It's $500,000 for a dump, or $250,000 for a dump that's a mobile home. So, the real question is, I'm one that, and we were talking before we started hitting record, I might want to travel the country and figure out where I want to live eventually. And, some parts, like when we're getting to the real nitty gritty of it, I have a friend who sends me things from South Carolina every day, and they're $150,000 homes that look like mansions. It comes down to the markets. Where you are is more important than what the house looks like in a lot of it. So what I really like about Nada on the functional level is that it allows people to invest in real estate with, I think, as low as $250. So I kind of want to get some of the ideation. I know that you're not really open for new investing quite yet, but how the first investors got in. When we're talking about investing, I want to be very clear. I'm talking about investing in Nada, not in the Nada company, but investing with the Nada system. So how that actually works. So this is not a solicitation for investment in Nada, but this is understanding how Nada's investment system will work, and they are going through SEC approval right now. So Monty, give us a little overview, if you will. You're welcome to show the website when you give that overview as well.
Yeah, sure. And isn't it funny, like the financial hoops we have to jump through, and clarification, and do your own research. And I'm not a financial advisor.
Because even Sweater is one of those that they have to stick to certain rules, and like you and I could be having a very different conversation if I were to send your legal department a legal thing from my lawyer as a potential investor. Then we could have a very different conversation than we're allowed to have with the public. But the ability to kind of democratize, even the ability to buy Miami real estate for $250 or Tampa real estate for $250 is really interesting. So I want to give you a little overview.
Well, thank you. I appreciate the warm introduction. If you went to nada.co right now, this is what you're going to see. Invest in cities like stocks. And we are live. We raised funds through something called City Funds, specifically in Dallas, Austin, and in Miami. Those were raised through a website called Republic. Republic is a crowdfunding source. And so non-accredited investors could go in. That's how we got all the way down to the $250. And anybody could go and invest. And you had just mentioned how extremely ridiculous the pricing is in Miami. And a lot of people have that same exact experience. Hey, I'm not in Miami. I would have a hard time finding a good deal in Miami. And if I took my, I think you put in $5,000 recently as a reservation. If you took $5,000, you couldn't buy a house in Miami. That's not even the down payment for a
Five
house in
five five
Miami.
thousand $5,000 on a parking spot in downtown Miami.
Right, right. But if we take your $5,000 and we gather it up with everybody else's money, and now all of a sudden we've got $2.5 million, or whatever those numbers are, that becomes significant. And so by crowdfunding, we're able to pool all of those funds, and it gives us significantly more leverage because now we're a cash buyer in Miami. And so you're not in Miami, but yet you're able to take advantage of some of the markets there. And we've got professionals, boots on the ground, who are able to go in and purchase homes, single family residence, or what's really cool and what I think everybody is really interested in is this fractional home ownership idea as well. So in those key markets, we are diversifying for you, the investors, through city funds, and we are purchasing home equity options. So we have some single family residents that are
Ah.
being rented, but home equity options are something relatively new to the market and really intriguing, especially now with what's going on with interest rates and just the overall housing market. But if you, Richard, had $100,000 worth of
Yeah,
equity in
yeah,
your house.
perfect example. Like I'll give you a real example because I plugged in. I don't own right now, but
Hmm.
I put in my parents' address on your website, and it
Hmm.
said that the house is worth $1.7 million. That house is fully paid off.
Hmm.
So so you would be able to sell essentially a home equity shares of that fully paid off house, or even a partially paid off house. You can sell part of it as well.
Absolutely. And it doesn't have to be fully paid off. You could just have a small percentage of equity there. But let's say yours, so that you've got 1.7 million worth of equity. Let's say you needed 17,000 to install solar, put in a pool, or some kind of home improvement project,
Uh-huh.
and you wanted to send 1% of your house, 17,000 bucks. Here you go. Here's your $17,000. We'll take a 1% slice of your equity. And so if your home appreciates, and you can see on the site, Miami is up 25.69% year to date, right? So if the Miami market's up 26%, then you as the investor in city funds would be following along with that trend. And because we've diversified across the entire city, I own 1% of your house and 1% of somebody else's house and somebody else's house, and all of
So
those slices get added
yeah,
up.
it's diversifying so you don't get hit by one neighborhood that gets hit by a hurricane, and then you have
Exactly.
insurance, like, because Miami and Tampa are in that, and even a lot of Texas is in that area.
Yeah.
But I guess that's a good logistics question. I had a question, but I kind of forgot it there. Let me think on that in a minute. But yeah, go on, and
So,
I'll come back to that.
those three city funds are successful. The portfolio is already built up. It is already performing. If you were a previous investor, you've got the quarterly reports, that sort of thing. And now we've submitted for additional cities. You can go in, just like you said earlier, and place your reservations on the website, and that really lets us know which cities are prioritized. Which
And
cities.
you have to get boots on the ground in those cities as well. And I guess
Correct.
my question came back to me. I was asking, with these buying homes, that makes sense. You're sending out people, you're buying homes, you're funding a pot, and then you're buying
Mhm.
homes from that. But how are you attracting the homeowners? Like, say, look, this. Let's say I've got a $1 million home. How are you
Mhm.
attracting homeowners? Do you just traditional advertising to do the equity side of things?
No. So we are actually partnering with local real estate agents and wholesalers to find properties for at a discount price. So if we're representing you through your investment through city funds, you don't
Right.
necessarily want to pay full fair market value for the property. You want to
Of
find something
course.
at a slight discount. So our target is to find properties at a 5 to 10% discount off of market pricing, that then we can hold in the portfolio for 2 or 3 years, rent out, and make sure that we receive somewhere between 8 and 14% is our target.
Right. I
Return.
guess, but more thing is the homeowners that already have it that are trying to get equity. How are they knowing that you're a
Oh,
source? How are they knowing
yes,
that NADA is a source? Because that's where my
yes.
question lies.
So those folks now are going to places like third-party providers, like a lending tree, or their local bank, or their local mortgage originator, and they're saying, "Hey, I want to get a home equity loan or something along those lines." And some of them qualify. Home equity loans are available right now, and that might be the best option for them. Some of them are finding like, "Ooh, these home equity loans." Ridiculous interest rates, and my monthly payments are really high, and I've got to jump through a bunch of these hoops because of regulations. And the alternative is, hey, we also have something called a home share, where there's zero monthly payments, and it's in exchange for some equity in your property. And we've partnered with solar companies, and we've partnered with some other home improvement style companies as well. And so If you are, if you go to a mortgage broker and they want to wholesale this out, they certainly can. Or if you find a solar company directly and they say, we've got option one, which is to lease our solar equipment and your
Right.
monthly payment is XYZ. We got option two, which is to buy it. And we got option three, which is to basically finance it through your home equity.
Yeah, I think there was a program. I'm trying to remember the name of it down in South Florida that was doing that for solar and energy things, and basically they take equity with the house to do that. So you're providing a better rate at some points. At some points, I know it's a hard thing to the end user to go your way.
It feels like it's weird terminology because it's not a loan. We actually, right? That hence the name.
Right.
When is a mortgage not a loan? When it's not a loan. So when you take out the home share, it's really equity. So there's no points, there's no rates, there's no interest that you pay on it. It's just how much do you think your house is going to appreciate or depreciate in X amount of time. So if you're going to hold on to it 5 years or 10 years. Yeah, so there's no interest accrued on the transaction, but if your home appreciates, then we share in that appreciation with you.
Oh, okay. So they get a benefit for being involved there.
Absolutely.
The homeowner gets a benefit there. Yeah, that's kind of really interesting. Now, here's a question. Now, you were saying that you've already done Miami, and 2 cities in Texas.
Austin
correct?
and Dallas, yeah.
Austin and Dallas. I don't know. You guys are based out of Texas. Just full
Yes.
disclosure for everyone. But I think what's interesting is how those people that invested in a crowdfunding way, and I know crowdfunding laws got a little weird. How will they eventually get an exit? I understand those that are going to get in later, but how will they exit? Or has that not been determined yet?
So full disclosure, we advertise actually, and in the Republic listing when people signed up for the crowdfunding, that our goal is to provide a secondary market. Now we haven't released all of the cities yet, so the secondary market is sort of a moot point until we release all 10 cities. Once we hit that spot, we'll have a secondary market. So you can exchange cities, which includes like some really cool opportunities to arbitrage. Not to get too technical, but you could arbitrage equity, which is a really cool idea. If you live in Dallas and you're thinking, wow, well, I think that the Tampa market is really going to boom, or Vegas is about to boom, or whatever city it is, you could extract your equity. You could sell some of your equity in Dallas to somebody and then buy somebody else's equity.
Almost like a stock market.
Almost like a stock market. Yeah. And now along with that comes the ability to exit and buy back in, all of those things. Now you still have to KYC, so it's fully compliant. But yes, you could enter
and at some point, those initial investors, the goal is once SEC goes through and everything like that, those initial investors will be able to exit for cash.
Absolutely.
That's the essential goal, because right now they essentially bought. I know you're a crypto guy. We're not going to bring that in, but they essentially bought an NFT for now, and you need a secondary market for the NFT. In the scheme of things, they bought an NFT for the Miami market. And you need that secondary market to give value to that market. And I know you were saying that in a press release, just recently you've got all that paperwork filed with the SEC, and NADA's just kind of waiting for the SEC to move through all those different things. And it's kind of like going back to the crypto world. You're waiting to get listed on Coin Market Cap. In the crypto world per se, you're at the mercy of the United States government. It could be really quick. It could be not as quick.
Knock on wood. It should be really quick. It was last time. So our first 3 entries were very quick on the turnaround. This next batch should be fairly quick.
So those are actually SEC approved. The Republic.
The first 3, they are all SEC approved. Yes.
Okay. Very cool. But there's no exit for them yet. They're all SEC approved, but there's no defined exit until you have a marketplace. Correct. All of those people who entered cannot exit until you have a marketplace. So I did also see on your website a debit card or a credit card of some sort.
Yeah,
what is
that's
the
very cool.
Logistical purpose of that? I saw that you could earn money holding real estate, buying real estate, doing different things like that. I will tell you, I'm the genius that actually has a BlockFi credit card. If you know anything about BlockFi. I say that sarcastically because after I got it, they stopped paying interest on crypto. So what are the benefits of that card, that debit card, that credit card? Because that's interesting. And so is that something you can get into now?
Or so the debit card is early next year, targeted release date. We again very compliant, concerned here, so we want to make sure we jump through all the correct hoops before we start releasing things, especially when it's connected to an investment like this. So here's what we're thinking. Is that the debit card will be a fantastic opportunity if you take out a home share. You take out a home share, we'll release the funds on the debit card. and we partner with a home improvement store or with some other relevant companies, so you can earn points. And when you take out a home share, we also have other services. We have mortgage services, we have traditional real estate services. Most of the folks that take out a home equity option at some point will need a mortgage service. So you can gather up points and trade those in for reduction in cost. So if you want a free refinance to take care of your home equity option in the future, you can do that. Or if you would want to list your house for sale, we'll list your house
And
for sale
it can
at a
pay the
significant
closing
discount.
costs. It can pay the
Exactly.
closing costs or things like that. So I guess the question is, because you said you really have two ways you're getting this fractional real estate right now. And I think your goal is to go towards the way you're talking with the credit card and everything like that. But right now, the boots on the ground is we're not going to talk about percentage, but probably is a majority of what you hold is your boots on the ground buying homes. And then you're trying to get more on the other side, if that makes sense. And as NADA grows, you're focusing more on the full stack approach of owning your whole stack yourself, of having customers on both ends. And it's good for NADA. Hey, look, and I say this, I'm coming to this conclusion as a sweater investor and as someone who wants to get into NADA in the Miami fund, at least, is that both ends make money, and that's good for everybody if both ends are making money. Elsewise, you have to output millions of dollars to buy property, which is not the most economical use of funds, especially in this given housing market. So people that that have equity in their homes right now, that's the idea, is to you're approaching multiple people. Now, I have not read all the financial disclosures yet, and I don't know. Can you say, so you have a targeted rate of return that you have yearly on the city funds that you can't promise that, but what are the fees on the city funds, or has that been figured out yet? Or what are you charging the current people in Republic? Because a lot of these things get eaten away by fees. Yes, Robinhood is free, but they're paying payment for order flow. Titan, I don't know if you've ever heard of Titan. Titan Invest is one I really like, and I pay Titan a 1% fee, and I trust them to manage everything myself. Sweater is about a 6% fee at maximum. So what are we looking at fees from your end that have been disclosed already for investors? Because I think it's important for investors to know.
I believe that it is 1.5%, but don't hold my feet to the fire on that. And I believe it's actually publicized on the Republic website for all the current investors now.
Right. It might have to change for your new investment side.
Correct. And what's interesting is that I was an investor first. So it may be relevant to tell you how I came to NADA. I've been with NADA for a little over a year, and I found them on Republic. So I've been in the mortgage space and in the finance world in large part. I had dabbled in crypto. We have that in common. And I was actually an investor looking to deploy funds. And similar story to you, I found some great investments, and all of that world really intrigued me. And so I started communicating with NADA after I was an investor and said, hey, how can I help you? What do you need, for your next phase? How can I help you grow? And they asked me for some referrals, and they gave me their plan. And it was really this home shares idea that really intrigued me. And I, for a long time, tried to find them somebody to take over that division. And then finally, I just decided.
You wound up doing it.
I finally decided, well, you know what? Like I'm at a point in my career where I've got some flexibility. I can go join a startup, and clearly I'm vested in them because I invested through, quite literally through the platform, right? So I'm vested, and I thought, well, okay, I'll come in, and I'm bought into the vision literally from the ground up. And then we became, we did everything very compliant wise. Even though it's not a mortgage, we still are NMLS licensed company. So we are an official, mortgage licensed. Even though it's not a mortgage, we still abide by all of those rules as if it were. So if anybody ever comes knocking on the door and says, "Hey, we've got all the documentation as if it were a mortgage," which I think is the right thing to do. And so I found the company based on all of the material that was through Republic initially, the rate of return, all of those things that, how the product worked and how it could help people was really what brought me in, and how beneficial I thought it could be, and how really it could just change the way that the financing is done in America on any kind of a house.
And I think you're kind of probably still in a whisper mode, essentially. You're not marketing. I'm saying not you personally, but NADA themselves. You're not going crazy yet. I mean, Republic does disclose how much funds are invested, or it doesn't disclose that. I don't know Republic well.
They do disclose it, and I think we've actually posted the number out there as well. I think we raised a little over $2 million overall through Republic, and so that number is out there. That number is public,
and that is really a proof of concept, correct? I mean, that is a proof of concept, and now you are ready to do a big. I mean, that's why you had, and this is a number I believe is public as well. This current round that you did from a VC side, I think was 8.1 million. So that's, I think I'm remembering that correctly. So that's
Absolutely.
four times what you brought in from direct users. You brought in from a venture capital side, which is quite an interesting and exciting number. Is, you 5x now. Those people that got 2 million, that put in 2 million, that's probably worth 3 million now, or 2.7 million as a total aggregate, just because of the real estate market going up. But I guess the thing is, your transition now, and I want people to know this that are watching this, I think your transition now is to get out of the more riskier things of buying homes in these metropolitans and having that fractional ownership. So I know you tried to break it down before. I kind of want to end with this so people understand the whole thing. Remember, you're talking about the $100,000 home? Is, as me as a homeowner, let's make math easy. I own a $100,000 home. And some of this is vision of the card and everything like that. So I own a $100,000 home, and I have $50,000 in equity in that home. I know, $100,000 home, it's probably a trailer. I have $50,000 in equity in that home. Right. What can NADA offer me as a homeowner? I understand that home in Miami, is going to go up with that market. But for NADA to get in, you were saying that I would get a card, or right now you're probably cutting a check if you're doing it that way.
We're wire transferring the funds to you. So right now it would work. You'd call me up. You'd say, Monty, I want $25,000 so I can do home improvements because my house is only worth $100,000. So I need to improve it here or there. We're gonna run a couple of checks. We're gonna make sure that you are financially still viable. There is a FICO score requirement, and we'll do a home inspection. So we do an online appraisal system. We verify that the house is in, reasonably good order, or if if you need certain repairs done, we'll make sure that those repairs get done. But I'll give you $25,000. Now you had $50,000 worth of equity. You can't touch all of it. It's sort of like air. It's there, but you can't really touch it. I'll give you 25,000 of it, and that's half. So that we have half of your equity now. Now, after you take that $25,000, you can go do your repairs. And time goes by. So you've done repairs. Now the house is worth 150. Time goes by.
And
I'm
at 25,000. I'm not paying anything directly, or how is that working?
No monthly payments. It's not a loan, so there's zero interest rates. You just get the 25,000.
That's revolutionary. It's a way to get equity for a zero interest rate. It's kind of like insane. Is anybody else even doing that? It's insane.
It's
like that.
Completely different. So we literally have turned the market upside down. So it's not debt, it's equity. So we are sharing in your equity with you now. And so we have an option, if we wanted to purchase 25% of your equity for $25,000. Now we hold on to that option.
So it's basically an options contract. It's an options contract.
It's exactly what it is. It's an options contract.
And you have to have, you said 5 or 10 years, correct? You
10
lock
years.
in that option? Okay.
It's a 10-year option. Now, you know how options work. So in 10 years, your true equity is probably going to increase, very likely.
Right.
And so let's say your house is now worth $200,000 in 5 years.
So you're making money on the increase in everybody's making money on the increase in value of the home. Everybody's making money, and as long as because you've got your city shares people making money, you've got the homeowner making money, and you've got NADA making money, so they can get more people making money.
Exactly. Yes.
So that's the idea. So you are owning that 25% equity for 10 years.
Correct. And truth be told, most of our people are not long-term holders like that. Most of the folks that have reached out to us initially are, short-term holders. Some fix and flip type folks who want to go in, increase the property value fairly quickly, and then they exit fairly quickly as well. So even though it goes 10 years, I think the average length of time held is probably significantly shorter. But
so the contract's for 10 years, but you can exit the option at any time, either party, essentially, correct?
Correct. Yep. Any point in time.
It's a 10-year option, but you have an exit option at that point in time. But you're buying, when I think of it, the 100,000 is a nice round number because you're buying a percentage of the equity in the home, and you're buying the option for that percentage. And it's kind of an everybody wins philosophy because you've got your stakeholders, which includes Sweater and your other venture capital partners. You've got the homeowner, which is getting access to money for free. Essentially, they're getting access to money for free on an asset, and then you've got your city shares owner. So I guess right now, the main question comes to the main thing that we're waiting for is you're having people sign up on NADA if they want to join Nada, they sign up, and they can put in their home value right now. Correct me if I'm wrong.
Correct.
And then they can see what their home is worth, and if they are in one of those markets, do they have the ability to reach out to you, or
Yes.
you reach out to them?
So if you're in Dallas, Miami, or Austin right now, and you have a house, primary residence, second home, investment home, feel free. On the website, there's actually a chat button there, so you can fill that out or just shoot us an email. Homeshares.
And when you put in the address, like I put in an address that is in Miami, it's kind of on the outskirts of Miami. I'm not giving away the address on here, but it's on the outskirts of Miami. Miami means the full Miami metropolitan area.
Correct.
Or is it just kind of okay?
Yep. So I think there's actually three counties that we can lend in.
Yeah, probably Dade, Broward, and Palm Beach County down in South Florida.
Right. So it's the entire what they call the MSA
area.
Yeah.
So so it's that entire market that's kind of the real estate market for those 3 areas. So you can go in there and you can get money right now. Again, this is not a solicitation for anything, but we're just trying to understand how it actually works. And I think that's phenomenal. As the homeowners get the money, you're making money on the equity, and you believe, and I believe that the house prices are going to go up over time.
Yeah. Even in a down market, I think we may not see the same trajectory we've seen the last couple of years, but real estate has traditionally for the last 50, 60 years outpaced inflation. And so it's a reasonable assumption that real estate is going to be a little more stable than things like stock market.
This is kind of a random question. Does there have to be a building on the property, or do you do land as well?
It is only single-family residence.
Okay.
So it's residential building only.
For a single family. Okay. It's not land.
No land or commercial.
Oh, okay. So
our specialty is single-family home. Very
cool. Yeah, I mean now I think that makes a lot more sense. Is that everybody benefits, and everybody you're getting that 1.5% or so. You were giving me an estimate from the city funds, but unlike let's say Sweater, which we're going to bring in because they are a similar company, they only have that one revenue source, which is that 6% that they have to take from their investors, because that's how they're making money. They don't have, if standard VC terms, the 20% carry forward and all that crazy stuff like that. Is you're making that money in a very different way, and it allows you to take less from everybody but make more overall, because in the end of the day, you've got 2 customers. You've got a customer on both sides. And it's really
we really are just the middleman in the scenario.
So the best way for people to kind of get updates is they can sign up on your website for updates, and their interest, I think you allow them to express interest in any of the cities that you have announced already.
That's correct. They can go right to nada.co, join the wait list. You can make your reservation there as far as your interest in which city, and
that reservation is not binding until you actually, because I signed up and I've not given you a bank account or anything yet. It's just so you can understand where you need to put boots on the ground for either the marketing side of buying some houses, because now that you've got some funding, now might be as interest rates go up. But trust me, I'm shopping every day for a house. As interest rates go up, you have some interesting leverage involved there right now, and you might be able to get some properties at a good price. And a lot of people don't know that yes, you're up 24% in those Miami funds, but you might go down to 15%, and people are going, wow, I lost 10%. But anybody that knows the market over time, kind of like where other assets are priced right now, knows that you're going to make that up over time. So I think it is
right?
Well, hopefully, yes.
Yes.
Past performance is not indicative of future results.
Right.
Hopefully. But thanks, Monty. If you do have any questions for myself or Monty, I will please leave them in the comments below. If I can't answer them, I'll get it back to Monty. We've got a pretty good chat function going right there between the two of us. If you do have any questions, leave them below. And as Monty knows, I think Monty's a no pantser too, but he won't admit it. When you wear no pants.
I can't show you the pants, but I am wearing the I Own Dallas shirt.
I Own Dallas. Oh, okay. So is that something that you can get once you have a thing?
That's the City Funds shirt there.
Oh, that's awesome. I've been trying to beg a Sweater to send me sweaters for the past 2 months. It's like, I want a sweater. But when you wear no pants,
I'll get you the shirt. I can't promise any sweaters.
No, and I love Miami shirt because I love Miami. But if you do have any questions, leave them in the comments below. This is Richard from No Pants Profits, and Monty, the VP of Finance over at Nada. And have a great one. Bye.
Thanks, everyone.